Hey everybody, the fuse is being lit right now. That's right. We're starting to see the beginnings of the fuse being lit that's going to cause this market to blast off. Hey everybody, Courtney Smith here with our TradeSmith weekly video newsletter, bringing the hammer to the markets for over 45 years. No way that guy is 45 years old, right? He looks like a baby. Anyway, listen, this is not baby talk. This is serious talk. So you need to memorize it, understand it, live it. All right, let's talk about the markets here though. Here we see the S&P 500. This is not the happiest looking chart I've ever seen, but I just said I think we're about to blast off. So one of the things we need to be looking at now are starting to see some shifts. First of all, one shift is that the purple predictor actually made a higher high. The price did not, but the purple predictor did. Now, the purple predictor is the on-balance volume, and it gives us an idea of what the smart money is doing. Well, the smart money is starting to come back into the stock market. Once we break that purple downtrend line up there, once we get above 2175, 2180, something like that, I'm going to want to go long. And I don't think that's going to take very long. The time of maximum loss potential is over. The time for a potential 10% correction, it's over. Now we need to start turning ourselves to a much more bullish scenario. Dow Jones, this is still not a pretty picture. Look at the purple predictor going down. But on the other hand, the NASDAQ is continuing to look good with the purple predictor still very strong. But I think that the action, as I've been telling you, is to be long NASDAQ type stocks, short Dow type stocks. That still remains true. But now we're starting to see the S&P pick up on the bullish story. Seasonality is neutral at this point. But if we break that green line at about 126, just under 126, I'm going to shift this our seasonality indicator to bullish. Why? Because normally from October through the end of April, this is the best period of time in the market, the best 6 months of the year. However, I always filter that seasonality by looking at the trend. So is the market agreeing with the seasonality? Not yet. But if it breaks that high, I'm going to shift to bullish. What does that mean? What am I going to do with that bullish signal? I'm going to start putting on more trades. And more importantly, I'm going to put on bigger trades. If instead of buying 100 shares, I normally buy 100 shares, I'm going to buy 150. I'm going to buy 200 shares even, if we get the seasonality backwind starting to work for us. The seasonal pattern here, still sticking with the blue line. That means that the seasonal dip that we had should be over this coming week. And then we should see the market rally maybe 4 or 5% before the end of the year. That means new all-time highs on most of the indexes. So that's where we're going. Keep an eye. Yield curve still just capping what we're doing. Asset allocation, you can see it's starting to move into the stock market and out of the bond market. And that means tens of billions, maybe hundreds of billions of dollars changing from one pot to another pot, from bonds to stocks. That's very supportive of the stock market. Our RISKDICATOR is also turning up. That's bullish for the stock market. You see a pattern starting to develop? Things which had been neutral, which had been even bearish, are starting to turn bullish now. Time for us to take off. Time for us to blast off to the upside in this market. Here's our global shares. They're not following along, but who cares? I don't want to trade them anywhere. They're going nowhere. Got to stick to the U.S. right now. Japanese stocks, who cares? Treasury notes. We've been talking about bondage over the last couple weeks. Notice what's going on here. I just told you that money was flowing out of the bond market and into the stock market. You can see it quite clearly here with the bond market under a lot of pressure all last week and a little bit the week before. We broke out of that pennant formation. We threw back up to the broken downtrend line. Now we're down at the old lows. However, there is some hidden bullishness here. Notice that we closed on Friday just a little bit above those highs that we made, the low close that we made the week of September 12th. But notice that the green line is not close to breaking the green line on that where it was on the week of September 12th. So if the price of bonds breaks below the low close we made the week of September 12th, and the green line, the RSI line, does not, that's actually telling me that this market is going to go back up again. Well, we'll see if that happens, though. Bond key factors, what a mess. Sideways, sideways. Maybe lower interest rates is what that top line is showing us. That's the price of gold. The dollar breaks up. Now, I talked about this last week. I said if it broke that horizontal green line, I want to be long. So guess what? I'm long. I'm long. Got to be long the dollar. Now, I told you the key market that we're really following is the interest rate market. That's the market that's the most dominant market out there. That higher interest rates is causing the dollar to move higher. Now, as a result of the higher dollar and the higher interest rates, gold got crushed. Now, I wasn't talking too bearish about it, but you can see the descending triangle. We talked about it last week. It broke hard. The objective is where that red arrow is. We've reached the objective. The objective was basically 1240. We got to 1243. We've already hit that objective. So right now, look for the market to stabilize this week, to not go any further down, but not really to go up either. And then we'll start to see what we want to do. In the background, I'm still bullish on gold, but I have no long positions because, of course, the market's going down, and I never buy things that are going down. That's a surefire way to lose money. At this point, technically, got to say that it's going to be a weak market. We broke down hard on heavy volume, but let's look for stability this week. Not ready to do any trading here. Gold short-term indicators, one sideways, one bullish, and one down. And yet the market cracked. Why? Because of interest rates and the dollar. Oil market should start to crack. If the dollar is strong, usually the price of oil goes down. So I think we're at the top of the range, and we'll probably start to go down now. A lot of resistance up there above $50. All right, everybody, thank you very much, all you freebies. Love having you here. But of course, if you were a real super cool person, you'd probably subscribe. But if you don't, that's okay. We still love you. Also, got to remind you, we've got one of our amazing stock success schools coming up. This is the premier stock trading education, so I'd love to see you there. I'm going to teach you some of the techniques I used to manage the #1 mutual fund in the United States. Yes, at one point I was the chief investment officer of a mutual fund company, and I had the #1 growth fund in America. It's just a peanut to attend. What you want to do is go to that website up at the top, bit.ly/stock success school with the capital S's, and it'll tell you all the information to get in there. It's a peanut for what you're going to get. You're going to love the course. We have a lot of fun, and you learn some amazing things that you can't learn anyplace else. All right, everybody, thanks very much. Fully paid up members, hang on. Got to go over all of our winning trades.